Hello, welcome back to NS channel. The Income Tax Department has notified the income tax return forms for the assessment year 2025-26, incorporating the changes in tax laws announced in the budget for 2024-25. In this video, we will see the changes made in the ITR form. Before I start, let me request you to subscribe to my channel if you have not done so far. Simplified filing for small investors. This year, the filing of income tax return has been simplified for small investors in case of salaried or non-salaried individuals with business income having long-term capital gain of up to 1.25 lakhs from sale of shares or units of an equity-oriented mutual fund or units of a business trust need not file ITR 2. They can file ITR 1 or ITR 4 provided there is no carry forward or brought forward capital losses. Asset reporting threshold increased. From financial year 2024-25, the taxpayers with gross total income of more than rupees 1 crore has to provide details of assets and liabilities in the AL schedule of ITR instead of the previous year's threshold limit of rupees 50 lakhs. Drop-down selection for deductions. While entering the deductions claimed under Section 80C to 80U, a more detailed breakup for deductions to be given by selecting the respective section from the drop-down menu. For example, instead of simply entering 80C 2.5 lakh, you will now need to break it down by specifying each deduction separately, such as 80C life insurance premium rupees 50,000 and 80C PPF rupees 2 lakh using the drop-down option. New capital gain rules integrated. With the implementation of new capital gain tax rule from 23rd of July 2024, we have to provide split up details of transfer of shares, mutual funds, property, etc. made before and after that date since the tax rates are different for the said two periods. For example, if shares are sold during the financial year 2024-25, the transaction executed before and after 23rd July 2024 to be split up and shown in ITR separately since the capital gain tax rates for the given two periods are different. Buybacks to be taxed like dividends. Before 1st of October 2024, tax on buyback of shares by domestic listed companies was paid by the companies. But after 1st of October 2024, the amount received by a shareholder will be considered as deemed dividend and taxed in the hands of the shareholder as deemed dividend. The cost of acquisition of the shares that were offered for buyback will be carried forward as deemed capital loss and can be utilized against the future gains from the sale of remaining shares. New column in schedule TDS. In the previous years, under TDS column in ITR, only head of income to be selected from drop-down menu. But for the current assessment year 2025-26, a new column is added to select the specific section under which TDS was deducted, like 194I for rent, 194J for professional fees, etc. Higher presumptive tax limits for digital businesses and professionals. Businesses with a turnover of rupees 3 crore in a financial year, of which 95% of receipts are through digital transactions, and professionals with a gross receipts of 75 lakhs in a financial year, of which 95% of the receipts through digital transaction can opt for presumptive taxation under section 44 AD and 44 ADA. ITR 4 form can be filled if the annual income is not more than rupees 50 lakh by professionals and individuals HUF and firms with business income. Aadhaar enrollment ID not acceptable. From the financial year 2024-25, Aadhaar enrollment ID is not acceptable for filing ITR. One must have a valid Aadhaar number to file ITR. Mandatory reporting of disability certificate acknowledgement number. In the previous years, individuals claiming deductions under section 80DD and 80U has to submit form 10IA at the time of filing ITR. But from the financial year 2024-25, the person claiming the deduction should also mention the acknowledgement number of the disability certificate in ITR. Separate reporting for gains on unlisted bonds and debentures. In case of gains from transfer of unlisted bonds, reporting in ITR to be made with a breakup of gains from transfer before and after 23rd July 2024, since the tax rates, classification of gains and the holding periods are different. With this, we have come to the end of this video. I hope you have found this video useful. Once again, I am requesting those who are yet to subscribe to my channel, please subscribe for the channel. Thank you.